This is Rod Kusin and Spoos for Risk for October 1st, 2014. This is an addendum to our earlier video that was performed live on this date. We are here to review the final outcome of today's red day down. We had informed you earlier in our video our expectations, and those expectations included the following. We anticipated that the market was going to drop down to at least 1938.50, as shown here, based upon the low volume area of the composite market profile from the very beginning of the calendar year. The market actually moved even further down to this next level of low volume at 1933.75 is as low as it went today. Now, we also informed you that our anticipated low for the day would take place in the last half hour. The low actually took place at 9:12, and at 9:28 we were already beginning to trend up. So we didn't quite make it to the last half hour, but it was fairly close. Now, that having been said, let's look at the Dow. Keep in mind that this morning the high was just slightly above the point of control, and we were already in a downtrend. So the lowest area of volume that we were tracking as the market dropped was here at 16,873. Now, if you go back to our video, you'll notice that we pointed out this area right in here, this area of low volume. And we said that we're likely going to spend some time right in at that price as we begin to fill in that area of low volume. Okay? Now, we did, in fact, do that. This vertical line here shows you where that gap previously was, and that is to say the area of low volume was equal with that line. It began to fill up a little bit as it spent some time there. Then the area of next low volume was right down in here, right below 16,800. And in fact, we dropped then again to an area of even lower volume until we came to a screeching halt at 16,776, right at about where this horizontal line exists. Now, we are not that far away from the low value area. Anticipate a drop to that number at least, either during the well, sometime during the morning of October the 2nd. We can certainly expect that the market will drop even further. Now, we will likely get a little bit of a rally off of that number. More likely it'll drop through that and stop right around this area of higher volume, which as soon as we can line this up, we'll let you know what that is. Okay, it's around 16,737, right about there. Now, it may go ahead and drop just a little bit further than that. Let's get our tool organized. Now, we should drop a little lower, maybe to 16,733, before it drops even further. Now, if it really drops a bit more, I would expect to see some support then at 16,723. But tomorrow we should rally up. We should get a little bit of a sell-off in the morning, at least to drop it down to that area of the low value area. It likely will penetrate through that, hesitate at 737. If it goes much further, 733. And I would expect a rally coming in at around 723, 724. Right in there. Okay. Now, where do we expect the ES to be as of tomorrow? Well, depending upon what happens in the overnight market. If we just look at where the next area of low support or low volume is, it's down here at 28. Okay. And then it's pretty difficult to say where this might go. It might just stop right in here at 1925, or even lower. It's very difficult to say where that's going to go tomorrow. But those are our numbers, at least at this particular moment. Now let's take a look at one other thing. Let's go back to our primary indicator. Now here's our primary indicator as we came down here and hit the low at 912. Pardon me, at 1412. The primary indicator began to take on a positive slope just after 130. So that's why we would have anticipated that we're probably not going to go any lower. So it was close. But a typical red day down really does mean in the last half hour. And that's why, as you look at where the Dow went, or perhaps to say where it didn't go all the way down to the low value area. You could expect that to happen tomorrow to finish out the pattern and then a rally up. Let's look at the premium. When we hit the low, actually that low hit at 1411. Notice where the premium was. The low of the premium was above our lower threshold. That lower threshold did not change all day long. And so a nice rally back up. And then when we tagged this low again, below the premium, above the lower threshold area. So certainly a change in the trend there was being seen, but we are likely, very likely, to go back down tomorrow morning to finish out the red day pattern. Now we can also see that just after 1 o'clock is where the Spoos dropped down into the 1.5 standard deviation calculated line that we referred to earlier in our video. Now we also mentioned that we expected that the VIX would at least come back to the initial balance, the upper initial balance. It went no further and then continued to come back down. So that little prediction proved to be true as well and brought us down to the low of the day. We exceeded the 1.5 standard deviation line on the ES, but if you look on the Dow just barely dropped below it. The same was true of the YM, just barely below it, and then began to rally back up. So these numbers, these calculated numbers, are very meaningful. It's good to know where these particular market internals can affect the market. So that's our video for October 1st. We invite you to take a demo with us. Learn how we do what we do. We'll teach you. We don't charge much. We're cheap compared to others out there. You've got everything to gain by learning this methodology. It truly works, and it's well worth the price. This is Rod Kusin and Spooman for Risk.